Hey guys, so thank you for taking the time to be here. We are joined again with Alan, and we are going to go over the minting schedule so that people have a better understanding of exactly how it all works and how it's to your benefit, really, to be involved now. So, Alan, over to you.
Okay. Hello, everybody. All right. Thank you, Peter. All right. So first of all, I'm going to start over on the right-hand column. There's several columns. The first column to the left begins with the week. There was week 0, 1, 2, and 3, right? And I believe we just completed week 3, and we are now on week 4. And so I want to start off here and talk a little bit about this is the maximum size of the market making staking. Okay. I think if we go to take a quick look here, um, we're going to find that market making staking right now has about 51,000 energy in it, approximately. 52,564. Okay. We are in week number 4. So you can see that we're below the maximum, but that's okay. This is front end loaded. This is how many new coins get added each week. You can see uh, we had a 15,000 added this week. It was like 6,000 left over from last week. So that's why we're about 22,000. Next week, another 19,000 limit. These are limits. These aren't actual coins. These are the limit amount, the max one can stake. And then you see it drops way off. So if any of these limits are not reached, that balance rolls over the next week. And so the idea is to kind of provide plenty of opportunity for people to come in and to become part of the market making staking contract. That indoor, right, determines these these columns here, which is the 3-week reward that comes after. So every time a coin is added to the limit, it generates a reward. The next week, it generates a 10% reward for the for last week. The second week after, it generates a 30% reward, and then the week after that, it generates a 60% reward for a total of 100%. So what that means, every time someone adds energy to the market making staking, it generates these delayed rewards equal to 100% over this 3-week payout period. And those are all shared by everybody that's in the reward. That's why right now, if you look at your UI, you see it's calculating what this week's reward is. It's taking the results of these previous weeks and it's adding them and it's calculating plus what's happening right now, real time. And that's what it's determining what your expected reward is for this week. And you will be able to claim that reward if you choose, beginning of the following week, which is Saturday, at approximately after 4 p.m. Okay, so and these just show you theoretical examples. And keep in mind, these are all estimates. The actual, if you can see here, we have the max total supply. We're nowhere near the max total supply. Most of the coins that we have they all have to be purchased, and all of the proceeds have to go into the liquidity pool on Uniswap. There's no other way to buy coins. So whenever someone purchases coins through either staking or any of the funds that we have set up here on our minting schedule, all the proceeds are deposited into the liquidity pool to provide liquidity for energy. So
Yeah,
energy balances are always proportional to the amount of capital in the pool. Yep, go ahead.
I got a question for you. So, for the people that don't really fully understand what a quote unquote minting schedule is, can you kind of give them the breakdown version, like in cryptocurrency? What is minting? What does that exactly mean? how does that apply to energy? And, how is this even being implemented so that this can even happen?
Well, minting is a software form of mining. So we're minting on the Ethereum network. We're actually creating the smart contract is actually creating new coins, very similar to the way a proof of stake would work on a blockchain. So it's you could look at the minting as mining, except we don't have to run any hardware or mining rigs. It's software based, okay? But it sets how many new coins are going to come into circulation. And one of the big innovations of energy is that new coin minting doesn't come as a reward for using a service as with other DeFi coins. It's not a reward token. It's only created one way, and that's when capital is added to the system and then subsequently staked, and that's what determines the supply. So that's a unique way of keeping an elastic supply that is has a strong relationship to the amount of capital that's been put into the system, and that's our recipe for liquidity on energy.
That's fantastic. So what you're basically saying here also is when you're looking at this minting schedule, as we're going through and we're in week 4, essentially as we go through after week 4, there's a huge drop off in the beginning of exactly how many coins will be able to be added to the market making pool, right? So
Yes.
and does that, so that essentially picks up as it goes through, or?
Yeah, it's set at 4%. So that's the 4%. If we reach these targets of 4%, then we'll be, all of the stakers and the market making staking contract would basically get a increase in the number of the coins that they own of 4%. Now, early on, you can see like last week, I think because we had extra front end allocation limit, I think we exceeded 13 or 14% last week, right? So, and
Right.
these next couple of weeks, and those rewards from last week are going to follow through 30%. These are going to be the next 2 weeks. Those are continuing to pay out from what happened last week, right? And so there's a delayed minting that occurs. And so you have to be in the staking, market making staking pool to get those rewards, right?
Got it. So if you're someone on Uniswap who goes, hey, I'm just going to go and buy the energy tokens, are they going to be able to benefit from that?
Only if they stake. This is the market making staking. So if some people are buying it and holding the coin, if they stake it, put it in the market making staking contract, they get the ability to be a miner. They get to be part of the ecosystem of fees that from our dApp ecosystem that is coming out on April 1st. And so there's plenty of benefits to being in the market making staking contract. One is high growth. The other is kind of like trading position. And then, and those are the two, basic differences. But keep in mind, anytime that someone withdraws from staking or withdraws funds, they pay a 7.5% burn. That means the coins are burnt. They don't go to anybody. There's not a fee. They're basically burnt. They disappear. It reduces the supply. So this minting schedule does not really factor in people going into staking and then leaving and taking a burn. So the actual number of coins that are going to be produced are a lot less. In addition, we have a liquidity supply, which allows people to purchase coins. Those also have to be purchased. They're not in circulation right here until they're actually purchased. And the liquidity supply is available for purchase. And then once again, all of those proceeds are deposited on Uniswap as well. So a good portion of our supply, which right now is at 195, about 120,000 of it right now is not on the market because they haven't been purchased yet, you see? So that means there's a very small supply of coins. It's going to grow based on people buying, depositing assets into Uniswap, and then staking or holding, right? So that's basically the way it works. So as you go, you'll see the rewards grow to eventually a pretty decent amount. That's 4%. This all is also based on the size of the staking pool. So if the staking pool um, is intended to grow, if we hit our goals going through 100 weeks, then at maximum we would have 4 million coins minus whatever was burnt, which will probably be pretty substantial, right? And so, and the beautiful part about it is there'd be a tremendous amount of capital backing up energy at that time in order for us to get to 4 million coins. So you can see that that's the recipe, right, for fairness, capital liquidity, and that's what we're creating here with energy.
So if I can, if I can ask a very elementary question from coming from someone who could be looking at this for the first time and doesn't really understand how these numbers can even be calculated. Um, is there an algorithmic way that this has basically been shaped so that this is how you've came to all of these, or how energy has come to all of these numbers?
Yes, it's there's a little bit of an initial supply front end loading of this thing to get us off to a good start. We're all experiencing, I saw one guy when one of our community members highlight, did I get 35% in just a short period of time, increased number of coins in 2 weeks or so? The answer is yes, because the number of coins, the staking pool is very small, and the amount of capital that's coming into it is large. And so it's generating really large uh, minting of coins that the current staking contract stakers are enjoying, right? Now that will slow in time. So yeah, there is, it's just the same as with Bitcoin, has a built-in schedule. They call it the halving. It takes it every time a block is processed, it generates a reward. Well, instead of us processing blocks, we're processing weeks, and we're scheduling a certain amount of reward as a percentage of the market making staking pool. You see, so it's very similar. That
So,
reward is set at goal over the long term. It's set at 4% growth, which is just a fantastic growth rate if we're able to.
so, so
Uh,
not only does energy max out at 4.392 million coins without factoring in the burning, but also by doing it this way, we have a fraction of the supply. If we're comparing apples to apples, we have a fraction, or energy has a fraction of a supply of Bitcoin. And in addition to that, there is no expensive mining or any kind of physical equipment that is needed because it is being done in a proof of stake algorithm. Is that correct?
that's correct, and it's more decentralized because there's going to be many holders, more holders of energy than there's going to be miners of Bitcoin. Miners of Bitcoin require a lot of technical expertise, investment, and they decide what software to run. Where with energy, the software is already implemented. Um, you don't have to run any software directly yourself. All you have to do is participate in the market making mining contract by making deposits, enjoying the minting rewards, just like a miner would of Bitcoin. And then more importantly, helping maintain a fair and orderly market as a market maker in energy. That's part of the reason that the flow of coins goes through. It's not that it's passive, it's actually active. You actually are getting the new minting, and we are relying on our community to be responsible to provide for a fair and orderly market, and that's how the process has been designed.
Hmm. Interesting. So let me ask you this question. So I see it says reward of first is 10%, reward of second is 30%, reward of third is 60%. Does that mean that if someone came into, let's say, week 14, that their first week they would receive 10%, second 30, and third 60?
Yeah, if anybody that comes in gets the benefit of these previous weeks because they get paid out over, like I said, that 60% reward is delayed, right, by 3 weeks. So someone comes in, you happen to come in during a week, prior week, you get the benefit of that, right? Vice versa, if you pull out, you lose a couple things. First, it's going to cost you in terms of rewards, right? You're going to see a reduction. You're going to have a 7.5% burn, and any of the yield that you would receive on the amount of coins that you have gained, uh, your actual earned rewards. That is the number of coins that were minted that you received because you were in the market making staking contract. All of that you lose the extra yield on those. You only get paid once a month, and if you liquidate, you lose that, but you get it the next month. So the idea is to look at these different economic choices that you have to make, balance out your long term, and each of us has to make those decisions for ourselves. Look at and try to manage that as a market maker and as someone as a holder of energy who's part of our community, helping us build a strong, vibrant ecosystem and financial asset of value.
Right, and we're all we're all essentially building this community together, right? And so, doing this as a unified effort is definitely something that's really important. That is just going to increase and boost the energy ecosystem, which will just help us in the long run. So, I think that's really important for people to understand. And a lot of people are looking at energy right now and they're saying, oh, I missed the boat. Energy is $600 or $550 with a little bit of a dip now. So what can you basically say to that, as far as how really it's still a very opportunistic time for
Sure.
people to be
I mean,
involved?
we only have right now 350 coin holders. Okay, we don't even really, until we get to 2,500, we're not even on Uniswap. We have a upside down smiley face. We can't even get our logo on there until we have 2,500. We've been in this for a little over 3 weeks, extremely early. The amount of capital that is in our liquidity pool is, I mean, we're on the board, but we're literally on the fourth page at the bottom because that's how early it is. You can imagine if our liquidity doubles, triples, quadruples, what that's going to mean for the price. The reason our price is high is because, unlike the other coins that are on the list that have billions of coins, every time somebody uses a service on their DeFi services, they get these reward coins, and then they count those as a yield, for what they receive, but they don't have any, any intrinsic value behind them, and they don't really have any capital necessarily behind them. They keep printing more and more of them. So, in contrast to energy, where coins are never given away, they're only minted as capital comes into the system. And that is why that's the innovation. That's why we think that it's going to be a very popular financial cryptocurrency asset that people are going to want to save with, and it's going to grow.
Yep. And I think it's important. I think you did a great job of explaining it. I think the community will really understand now a little bit more about the minting schedule and how important it is and the way it's actually put together. So I appreciate the explanation.
Yeah.
And
I just want to mention one more thing. I mean, we're all today in, trading and the financial markets 7 days a week, 24 hours a day. And we're all kind of caught up. We're getting so short-term focused, right? Imagine short-term focused people early on in cryptocurrency buying Bitcoin at $8 and having it run up to 200 and selling it, right? Felt great at the time, but in the long run, obviously, not such a great value, right? So what I want people to consider is to give this project time to bring out its apps, generate the ecosystem, continue to increase its liquidity. Like I said, we're just at the very beginning of it. And you can, project for yourself what kind of a price you think we could have. And obviously the prospects, though none of us know where the market's going to go, myself included, you can see that the prospects are good for a very fast growing financial asset that developers are going to develop for and people are going to want to save with and use the tools to invest and increase their wealth. The dApps that we're developing and we'll be launching here on April 1st.
And so last but not least, let me ask you this one last question, Alan. As we know, what basically increased the scalability, what increased the ability of awareness for Bitcoin was, institutions getting involved and, larger companies really starting to put it on their schedule, and so that they're able to, get involved in the world of Bitcoin and be able to benefit, and obviously all the holders benefit as well. So what do you think that NRGY can do to actually increase that adoption?
Well, on the institutional level, what institutions look at is they look for cash flow, right? And we believe that the market making staking contract that serves very similar to the way, an Apple store or Google store, but instead of being for centralized applications, decentralized applications. We all look at our phone, they're all huge companies. I mean, every little icon on our screen is $1 billion or $10 billion or $20 billion. These are the most fastest growing financial and services companies in the world. And they're right on our phone. And that's the interface they're using. And what we're seeing is a future where people, rather than the revenues going to the platform providers, Apple, Google Play, the revenues all going to central companies. You can create decentralized apps where there's no company needed. The apps run server free, tech team free. They're only limited by creativity. They can help people save, earn, and provide services of all types, everything from games to financial algorithms to all types of anything you can imagine. And people, the NRGY market maker stakers, which I'm part of, I expect to receive plenty of fee rewards, right, from these businesses, and actively developing applications for NRGY. Other people are doing the same, and it's going to be really exciting. And there's some really innovative, disruptive technologies that are going to help people save on gas fees, solve some of the problems in DeFi. So we're going to make some news. We're going to make some waves, and eventually, we're at such an early stage, it's hard to talk about institutional adoption, but we can get there quickly because of the way it's designed. It's designed for us to attract those types of capital investors over the long term.
Awesome. Again, Alan, thank you so much for your help and explanations, and I'm sure everyone will be appreciative.
All right. Well, thank you guys, and thank you, Peter, for everything you do. And I look forward to answering any further questions you might have. Okay. I'll
Definitely.
do my best. If I don't know it, I'll go and check on it and find out. Okay.
Thanks, buddy. Appreciate it.
Okay. Thanks. Bye.